Okay, let's jump right into the stock market technical analysis. We're going to look at a handful of stocks and the broad markets. A couple things I want to point out. Excuse the dogs barking in the background. All right, let's get into triple Qs, guys. We are continuing to backtest this trend line, this wedge here. We've got this bearish rising wedge. We have negative divergence. Broke once. We did backtest. It gapped up on Nvidia earnings here. Been kind of chopping around today. Let me kind of zoom in here. You'll see today they're just bouncing it back up, doing another back test. So that's it. It's not breaking down. We've broken this trend line, but it continues to back test. So we'll see if this continues, or maybe this is the last hurrah. It's hard to say because we can continue to back test. So there's no real indicate. I mean, if we just move this trend line up, we can continue to kind of grind higher and back test, and the market will continue to make new highs for however long it wants to do that. So again, we need to see definitive sell signals. So the triple Qs is made up of Microsoft out. It's the Mag 7 essentially. So we'll look at those, and there's a couple things I want to point out. So here's Apple. This is interesting. We'll see how this actually closes the day because that's going to be telling. But on Apple, look at these support areas. You've got support all through here, breaking down today. Okay, so we do have a sell signal as of right now. Now, this is a daily chart, so they might swoop in, intraday or towards the end of the day and buy this thing and save it. That's completely possible. But as of right now, it's a breakdown, and that's a sell signal in Apple, one of the major Mag 7 stocks. The market's not going to go very far if Apple is continuing to sell off. I think, and I told one of my subscribers that's in the private member group that basically you're going to have the Mag 7s typically trade kind of together. And so one of two things are going to happen. One, either the other Mag 7s are going to get the note that Apple's breaking down and they're going to start to sell off. You'll need to see Nvidia start to sell off. So far, that's not happening. Or the dip buyers are going to come in and say, hey, here's an opportunity to buy Apple on the dip, and they'll bid this back up and save it. So I don't know which way it's going to be. We'll have to just wait and see and react accordingly. But there's Apple on a sell signal as of right now. Nvidia just continues to move higher. I've got this trend line. It was broken once, and maybe they're back testing. It's not. It's not as definitive of a trend line anymore, but, I'm going to leave it up there for now. We'll see how Nvidia closes the day. Again, you're going to need to see Nvidia start to sell off if that breakdown in Apple is probably going to stick. If Nvidia is not going to sell off, then they're going to come in and buy Apple. That's the way I view it. Google, that one's broken down. So here's Google. You can see here on the daily chart, you've got support, a couple little reactions through there. There's another one right there. And then boom, big breakdown right there. That's a sell signal on Google on the daily chart. Now, it hasn't got, there hasn't been continuation. It's been kind of just grinding around. But it is on a sell signal. And so, again, we now have Apple and Google on a sell signal. Of course, Apple, we need to see that daily close to help confirm that. But that's two big ones there. Tesla's kind of already broken down. I mean, Tesla's been in a downtrend. This is Tesla here. While, Nvidia has been making all-time highs and some of these other ones have been moving up, Tesla's actually been moving lower. So here's your downtrend, your bear trend. Tesla's in a bear market. From the highs, it is down about 50% now from the all-time highs and continues to trend lower. So I don't see, that one's basically broken. Microsoft, this one's still holding up. All right, you need to see this one broke. This is a big one here. You've got a bullish trend there. You do, really negative divergence is pretty clean right here on the, if you want to just get rid of this, you can just show it right there. There's negative divergence on the RSI, and it's on the PPO. It's remained on the PPO. So you have negative divergence, but you don't have a breakdown of trend. You don't have a sell signal. So you need to see this one break. And I think just one by one, these things might just start breaking. And we'll see how, obviously, Apple closes. Meta, continuing to hold up there. Meta, it gapped up on the big earnings report, and then it's kind of trading up in this range, grinding higher, but not, it is diverging. It's starting to show negative divergence right there on the daily. So it is grinding higher. That can continue. We need to see some sort of a sell signal, breakdown, gap down, reversal candlestick, something. All right. And then Amazon still holding up as well. All right, there's your bullish trend on Amazon. Support, support, support. You need to see that trend break before we have a sell signal there. So Amazon and Meta and Microsoft are the ones, and Nvidia, obviously. Those need to show some sort of weakness and signs of a sell signal. And then as of right now, we have Tesla, Apple, and Google that are all on sell signals essentially. Okay, these financials are starting to they look pretty weak in general. I covered that in the private member video this week. I went through all the components of the financials and gave kind of in-depth analysis. So I'm not going to do that here. If you're interested in getting that kind of analysis, feel free to join up in the private member group. Link in the description below on that one. But we'll just cover the XLF. XLF obviously in a bearish rising wedge here. Just very similar to kind of some of the other stocks out there. Negative divergence on the momentum. Still holding that wedge, so we don't have a sell signal, kind of waiting for that breakdown. And you can see right here, they're just, basically holding this wedge. It's a pretty compressed trading range right now because we're at the apex of the wedge. So it should break next week. Sometimes what they'll do, though, is they'll break it up. These are bearish patterns. 80% of the time or so, they're going to break to the downside. But sometimes the market makers, when I say they, I'm talking about market makers. All right, you've got high frequency trading firms. They're more scalping. But then you also have market makers who are basically, looking to push stocks in certain directions. They have big money to move it. Banks have trading desks, all that. That's they. And then you've got, so sometimes what will happen is they'll pop it up above this wedge, run all the stops that, for anybody who, basically short or and then they'll run it down. And then, so that's sometimes what they'll do. Because you have people that are anticipating the breakdown. Because it's a high probability pattern, it's very likely. The probability says it's going to break down. So you'll have people front running that. So they'll pop it up, run their stops out, and then they'll break it down. I don't know if that's going to happen. Usually what happens is it just breaks down, all right? And then you get that's a sell signal if that happens. So keep an eye on that one. That's the financials. I think there's something going on with the Fed stopping their their money program next week. So, who knows? Maybe these financials will start to break down on that. Flipping over to oil, this looks like it's breaking out today, having a breakout from some former resistance here on the oil futures, up 3%. It's a pretty good move for oil. So yeah, this to me looks like we've got have some resistance, and we're breaking out. We'll see if this sticks, but it is a breakout as of right now. So. Again, if oil's going to rise, that should continue to put inflationary pressure. Oil's the major contributor to inflation, to prices, cost essentially, consumer prices and producer prices. So if that continues to rise, you should see the CPI starting to spike back up, and everything's trading on the Fed. This whole market is all trading on the Fed. I know there's basically two concepts the market's trading on: interest rates and AI. That's basically what the market's trading on. So any kind of the AI is basically a bubble. I mean, I know the fundamentals seem sound, but the price action doesn't justify it. So any kind of mention of AI, stocks are spiking. That's kind of the bubble. And then interest rates, basically, if interest rates continue to rise, then that will put pressure on the Fed. Here's the TNX, down a little bit today, but still holding the 200-day moving average. You can see it's actually getting bid up right here, so kind of looks like support, basically. And again, so I'm just watching for this right up here. If interest rates pop this level, it's about 4.33% on the 10-year. You can use TNX to look at we're looking at interest rates right now. Then if the 10-year interest rates go above 4.33, the market should start to pay attention and kind of panic, I would think. So I'm just looking for that. If interest rates continue to fall, that should be bullish for the market. I would expect that the market likes that, and stocks will continue to rally, especially interest rate sensitive stocks like IWM, things like that. IWM is probably up today with the interest rates down. Yep, you can see it's slightly up 1%. And so yeah, if interest rates continue to fall, this would probably be the best long, I would think. If interest rates rise and they do pop that 4.33 area, then you would think that IWM is going to probably sell off pretty hard. Lots of financials in here too, and with the financials looking kind of weak, at least with a bearish setup, then that to me makes this thing look weak. Here's a short trade idea. It's not actionable yet, so it's merely a setup. We have to wait for there's still some conditions that need to take place. But this is A&F, Abercrombie and Fitch. Now I don't know if where you guys live at, all of a sudden everybody's wearing Abercrombie and Fitch, but from my perspective, I don't see a lot of people wearing that. I know we had a store here in town that closed down. And also, this is clothing that people wore, 15 years ago, basically. So, I don't know what's going on here with the stock, but there's a couple things I want to point out. All right, it's just basically, it looks like a massive short squeeze, basically. But we have negative divergence. All right, that remains on both momentum indicators. You can see it even right here on the RSI. So you have a divergence that's in place. You have it's basically a wedge, bearish rising wedge. We're looking at the daily. It's been going on for a while. No sell signals. All right, we haven't broken down. We're kind of just trading it along the top end of this channel or this wedge, and so there's no breakdown. We do have earnings coming out next week. It looks like on the 6th. So yeah, that should be next week. And I don't know. I guess they're just going to push this thing up into earnings and then gap it down. Maybe that's what it's likely going to happen. Could be a sizable move. So there's obviously elevated risk with earnings coming out. Maybe that sell signal comes on earnings, or they might just gap. The thing is with this, they could gap this thing down huge, and you're not going to want to short it if they do. So you kind of have to determine whether you want to take the risk ahead of earnings. They might gap it right down to this 200-day, and then I would think it'll push down to this like 49.50 area. You can see some support right there. I don't see any other levels of support, so I think we probably just gap down, and maybe even it falls that far. That would be a move of, from where we're at right now, it's a potential drop of about 60%. So I don't know if that's going to happen all at once, but that's a decent trade setup. It's not actionable quite yet unless you want to take the risk of stepping in before earnings. All right. Position size would be important too. You wouldn't want to load the boat here, because if it gaps up, which it could, anything can happen on earnings. You have to be able to have a position that you're comfortable with the loss. Another thing to note, if it's just interesting. You look at the weekly chart. Look at the RSI. The RSI on the weekly is all the way up around 95, 94.75. I mean, the RSI doesn't go much higher. And if I roll back at really the entire history of this stock, which goes back to 1996, it's never been as overbought as it is right now. Okay, so this thing is massively, it's the most overbought it's ever been, basically for 30 years, just about, not quite, 28 years. So I don't know what's going on here, but it's, to me, it's a screaming short, if we get the sell signal, essentially. The only problem is, because it's so overbought, it's such a crowded trade that if earnings comes out and it's perceived negative, you're going to see a massive gap down. PANW, this one had a really bad earnings report and it dropped pretty sizably, but it looks like it was saved. I know there was some news about some government person buying it. On this one, you can see here on the daily chart, support, 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 support. Okay, and then they gapped it down on earnings, but look, they've rallied it, they've recovered it, and we're basically right there at support. So that could be a buy, could be a long right there if you're looking for, you know, a buy the dip opportunity. You're basically, you know, you could have bought it here at the 200 on the gap down on earnings, or you can buy it here on this support line. You break this trend line, that's a sell signal, so you'd want to have your stop, you know, under there, but you know, that could be a long for a bounce, maybe fill the gap. That's all I got, guys. I'm going to get the video out, and I will catch you guys on the next one. All right, take care.